All right. Hello and welcome to the Financial Wellness Workshop. So our agenda today is we're going to start with introductions, talk a little bit about why we're here and what we'd like to get out of this. Feel free to share if you would like to, you don't have to. So first section is starting with income. We talk about like how much you're making from all sources of income, and then how we take that and save. So saving is essential is the next portion of it. Periodic expenses is something we'll be talking about. Living expenses versus like lifestyle expenses. Tracking your spending, a spending plan, some brain tricks to kind of help things stick, basics of income tax, and then being prepared for taxes. So important terms to remember: gross income is the money you earn before taxes and deductions. Net income is what you have left after taxes and deductions. And deductions, items taken out from your paycheck other than taxes, like health insurance, dental insurance, flex spending contributions, and 401k, 403b contributions. Pre-tax deductions from your paycheck that are taken from your gross pay before your taxes are calculated, they reduce your taxable income.
Can you give an example of the last one?
Yeah, like a deduction would be like, for example, if you have a home office or are self-employed, you would be able to deduct any of your office supplies or things that you're using for your business, that kind of thing. I'm not sure if you can do it for like, I know sometimes you can if you just have like a home office that you're working from. Sometimes if you have to buy things for your home office, you can deduct that as well.
Thank you.
All income should be included. So here is on this table over to the side is one of the documents that I said or I gave in the chat. So for anybody that's on the replay, I'm gonna have my email at the end of this presentation, and you can reach out to me via email to get those documents if you would like. They are fillable PDFs. So any job in which the paychecks are similar every time. So you're going to want your SNAP benefits, your daycare subsidies, your Social Security benefits, and other types of assistance paid to you. Variable income, so tips earned and each shift and adding them up for the week. Child support only when it comes in. Commissions or other overtime hours. And if you're self-employed, don't count an invoice as income until the check is cashed and cleared. So pay yourself first is a motto that is often taught and followed by many. The advice is to start small and increase the amount as you feel more confident. So this is about savings. Having an emergency savings is a huge benefit. According to a 2016 study, families with a savings cushion as little as $250 to $749 are less likely to be evicted, miss a housing or utility payment, or receive public benefits after a job loss, health issue, or large income drop. Higher saving levels are associated with even lower hardship and benefit receipt. Savings are at least as important as income. Low-income families with savings of $2,000 to $5,000 are more financially resilient than middle-income families without savings. So 5 ways to make a savings habit. 1, set up automatic monthly transfers from your checking into your savings account. See if your direct deposit can be split into 2 accounts, most to checkings and some to savings. Most companies will do this. Once you pay off a loan, keep paying that amount to your savings account instead of the creditor. So this could be for credit cards or loans. If you're paying towards a loan and you paid it off completely, then just take that money and put it into your savings um, instead of paying off the creditors. Save all your loose change and deposit it into savings. Most banks and credit unions have coin counting machines you can use for free if you have an account. Pull all extra money, bonuses, tax refunds, gift money, and rebates into savings. Set aside a small amount when you achieve your savings goal for something fun or meaningful so you can celebrate your successes along the way. So I don't have automatic transfers going into my checking, but what I'd like to do is I like to do what I sort of call a no spend month, and I will only spend money on things that I need or require at the time, especially if things are tight. And then anything I have extra after when I get my paycheck, what I have ever extra from the last paycheck, I put into savings. And then as far as the setting aside a small amount, I actually have a separate savings account that's called my fun money account. And I put $50 a paycheck in there so that that's kind of my money that I have for, going out to eat or doing something fun, going to a movie, things like that. Plan for periodic expenses. So for your quarterly bills, things that now I didn't know this. I guess some water and garbage bills you pay quarterly. I know ours isn't like that, but I know some are. Car, home, or renter's insurance. It can be every 6 months. Car maintenance. So, we all have to deal with oil changes pretty regularly if we have a car. Taking care of the brakes, taking care of the tires, and then just random things that kind of go wrong or need to be maintained, like the battery and whatever else. Gifts, holidays, birthdays, and then travel vacation. So for this, I'll go in a little bit more into it as we go through, but so I think it's such a cool idea that I never thought of because my husband and I always get to the holiday times and we're realizing that we're overwhelmed because a lot of our bills are due at that time, and we also have the holidays and birthdays. My niece and nephew have birthdays in December, so it ends up being quite the chunk of change. So we realized that we need to put aside money monthly for that December time period because it's such a big chunk of money that we have to spend during that time. All right. So here is just a little table of examples of what kinds of bills you'd want to plan for. So this is a periodic monthly expenses exercise. So if everyone just wants to take a moment and figure out what the calculations would be for these, so what your monthly payment would be for each of these things. So just calculate the amount per month to put away for these expenses, and then I'll give you like 5 minutes to kind of figure out what that would maybe be, and then I will give you the answers after. And then anybody who's on the replay, just well, you can do it too, because I'm not going to stop the recording, so you can do it too, and then I will give the answers in a moment. All right, I'm gonna give answers now. So for a garage bill, $75 every 3 months, $25 a month. $600 over 6 months, you're gonna do $100 a month. $300 yearly, $25 a month. 600 yearly, $50 a month. And then 1,000 yearly, 83.33 cents. I would probably just round that up to 84. So as you can see, it seems more doable when you're saving per month for these bills versus like having the bill come up and then suddenly owing that big chunk of change. This is just kind of planning for those ahead of time so that you're not getting to that point, that 6-month point, and being like, oh wow, I don't have that $600, and having to put it on a credit card or whatever. All right, so living expenses. So living expenses should be essentials like rent, mortgage, food, internet, phone, transportation, daycare, clothing, health insurance, and medical needs. Debt, so paying off any debt that you have, your loans, student loans, car loans, medical bills, all those kinds of things. Security, so having a put and take account for monthly savings, for emergency account, retirement savings, not from the paycheck, and life or disability insurance. And then lifestyle, so whatever you like to do. You're into sports or music, lessons, or you want to have cable TV, or if you have pets or any hobbies that you have. My husband's really into running, so he spends a good chunk of money on running shoes and going to out of state marathons and stuff like that. So different kinds of hobbies, any entertainment that you really enjoy. These are all things that make your life better and more enjoyable, a better quality of life, basically. Unfortunately, as we'll talk about later, lifestyle kind of falls to the wayside when we're tight on funds, and then we just focus more on the essentials. So tracking your spending. You want to determine inconsistent expenses. Tracking can be done by looking back at bank or credit card statements and identifying items that fall under the different categories listed above. Or with a paper and pencil, write down everything you spend outside of bills each day at the end of the week or at the end of the week. Some people like to use Excel to make a spending plan or track spending. There are also many apps that make creating a spending plan and tracking spending easy. So I think there was a fillable document for this. But here's a list of some budgeting apps. All of these ones up here have a free option, and then Quicken and YNAB. YNAB stands for You Need a Budget. Those are both paid. So I know I used to use Mint. I'm currently using Rocket Money, which is pretty cool. If you don't know what Rocket Money is, it's an app that helps you budget, but they also have the opportunity to see what all your subscriptions are in one place, and they will help you cancel them from the app. I personally don't recommend doing the canceling from the app thing, because not only does it take a long time, but I had them try to cancel my Audible for me, and they ran into some sort of problem and then I had to do it myself anyway, so it didn't really feel like that was worth it. But I also think that them canceling subscriptions for you, I think that's a paid service. So yeah, these are all good. My aunt uses You Need a Budget, and then I've heard good things about most of these, but the only ones I have personal experience with are Mint and Rocket Money. What if you're spending more than you earn? So in this case, you would list all of your essential expenses, like we were talking about earlier, what is absolutely essential. List all of your debts, list any bills or debts that are past due and the past due amount. Prioritize essentials first. So what we were talking about, like rent, food, car, that kind of stuff. And then security, so making sure that you have an emergency account and somewhere that you can put money away to take out when you need it. Then focus on debts, and then temporarily cut out all lifestyle expenses as you are able. So, so yeah, like I said, this kind of falls to the wayside when we're tight on money. Prioritize past due bills and then work out catch-up plans. Once one bill is caught up, add the extra payment to the next bill that is behind until you are all caught up. Slowly add back in priority lifestyle expenses, those things that add extra value to life. So for these catch-up plans, one thing I wanted to mention is you can call the companies that you owe and explain the situation. And in some cases, they'll give you some sort of break. I had a client that was behind on her mortgage. She was worried about losing her house. She called the mortgage company. She told them what the situation was, and they gave her, they just knocked off 2 months of her mortgage just to help her get caught up. So a lot of places that you owe money to are willing to work with you. And sometimes it can be scary to call, but usually it's worth it. And, if you get somebody that's rude to you on the phone, I would say ask to speak to a supervisor because they shouldn't be treating you that way when you're trying to call and figure this out, right? All right. So there's a trade-off for everything that we do, everything that we spend. So this is all about what am I giving up if I spend this money now? So like what could I get later on if I don't spend this money now? For example, they're saying here, like if you're buying a $7 strawberry smoothie, you decide you're gonna go to a smoothie place and get yourself a smoothie, right? So here's your $7. Oops, you're spending on a smoothie, but here are other things that you could get later. So you'll benefit from having the smoothie now, but you could put that $7 towards gas, or I don't know what this is supposed to represent, plants. Get a ticket to a show. You could go out to dinner, go to a music show or get music lessons, um, get a bike or go on vacation. So this is kind of like, do you really need this smoothie? Is it important for you to have this smoothie? Or would you rather put that money that, it's a small amount, but it adds up if you get smoothies every day, right? So would you be able to take that $7 and put it in the savings so that later on you can go to a show, have money for gas, go on vacation, those types of things. So it's kind of like just paying attention when you spend money on anything, just saying like, okay, so I used to be a avid Amazon shopper. I've stopped that recently, but I used to go on and I would just say like, I really want this thing. Do I really need it? Not really, but I'm getting it anyways. So now I'm paying more attention to what is actually a need versus a want. And I'm paying attention to whether or not I actually need that thing for something, or whether it would actually be beneficial to my life to spend that money on that thing right now, or if it's more important for me to have an emergency fund or a vacation fund, or to put it towards debts, whatever that may be. All right, so this is something that was recommended to use cash as a way to not overspend. And most of us, or I find that at least most people in my circle, they don't really use cash very often. And so it's mostly credit cards. And I'm one of those people. I'm not much of a cash user. But numerous studies have shown that people spend more when using a credit card than when they pay with cash, because there's something about that feeling of loss. Like you don't really feel like you have that feeling of loss when you're using a credit card, because like it just kind of, you hand them the card and you don't really see the money going away unless you look at your bank account regularly. And then when you're spending money, like you can see the cash, you can see that money going away, right? It's like you have like your $100 to spend on groceries for the day or whatever, and you start handing the money to the cashier and you're like, oh, there goes all my money. Like you're watching it go. And so it's that psychological effect of, I'm seeing that money leave my possession and it's not mine anymore. So a Massachusetts Institute of Technology study showed that the increase in spending could be as much as 100%. Retailers make it easier and easier to spend money because they know that it will work. Why is that so? It's thanks to our lizard brain. Switching to cash is one of the best ways to limit spending. When cash is the only option, it's impossible to spend more than what is available. If using a credit or debit card is the only option, make sure you make note of what you spent in your budget app or wherever you track your spending. So for a while, I was tracking my spending in a notebook. So if I didn't have the notebook with me, I would just track it when I got home. Or if you use a small notebook to track stuff, you can just bring that in along with you in your pocket or your purse. So then that way you're sort of telling your brain that, yes, I've spent that money, and showing your brain like that money is gone, you know? Does somebody have a question?
Yeah, what does the lizard brain have to do with retailers making it easier for us to spend money?
So I actually don't know. Sorry. There was an article that was linked to this and I didn't include it, so I apologize. I don't know the answer to that. I can look it up later though and send it to you. All right. 5 key tax terms. So this is the basics of income taxes. Withholding. This determines how much is taken out of your check each payday for state and federal taxes. It is calculated by using information provided on your W-4 form with your employer. Use the IRS calculator to figure out if you are withholding enough or too much. And there's a link here, which I can send to you guys, for having a withholding estimator from the IRS.
I have found that I have extra taken out of state and federal, and that way I know I'm getting money back at tax time. I
Yeah,
don't want any surprises that I'm gonna owe.
yeah, absolutely. Yeah. I find that I don't know, the way that I fill out my taxes for work, it ends up being more than I owe. So, and I'm fine with that. Like you said, it's better to get a refund than owe money. Filing status. Your filing status determines how much you can claim for a standard deduction, which credits and deductions you may be eligible for, and which tax bracket you ultimately end up in. There are 5 status options: single, married, married filing jointly, married filing separately, and qualifying filing widower, and head of household. 3 tax deductions. These reduce the amount of income you must pay tax on. Unlike a tax credit, they're not dollar for dollar, but reduce your taxable income at a level equal to the percentage of your marginal tax rate. The rules and eligibility can change from year to year, so be aware. Payroll deductions reduce your taxable income immediately. Examples: pre-tax medical and dental insurance, and retirement account contributions, and FSA or HSA contributions. Standard deductions reduce your income later when you file your taxes. As of 2020, it is $12,000 for single people and $24,000 for married couples. Example, let's say you're in the 22% tax bracket, a 1,000 tax deduction will save you 220 in taxes. Tax brackets. Brackets are where many misunderstandings of tax rates occur. Your income is taxed at different rates at different levels rather than your entire income being taxed at a single rate. Let's say your taxable income is $52,000 and your filing status is single. Here is how that income will get taxed based on 2021 tax bracket. The first $9,875 is taxed at 10%. So $987.50. The next is $40,125 is taxed at 12%, and the amount taken out is $4,815. The last $2,000 is taxed at 22%. Oops. I can't get back to it. Does anybody know how to go backwards in a PowerPoint? I thought there were little arrows down here, but I'm not seeing them. Hang on a second.
Can you use the arrows on your keyboard?
Yes, thank you. Sorry about that, guys. All right. All right. Yeah, so 2000 is taxed at 22%, being $440 out of that amount. And then the marginal tax rate is the rate of the last dollar you were taxed, so 22%. All right, tax credits. These reduce your tax bill by giving you dollar for dollar credit towards what you owe. They can be refundable or non-refundable. Non-refundable tax credits can reduce your tax liability to zero, but not below for a refund. Examples, lifetime learning credit, retirement savings contribution credit. Refundable tax credits allow you to reduce your tax liability and may provide a refund. Examples, earned income tax credit and additional child credit. Partially refundable tax credits will reduce your tax bill but are complicated. If your tax liability goes below zero, only a portion of the credit may be refunded. An example is the American Opportunity Tax Credit, which is for tuition paid at higher institutions of learning. So to be prepared for taxes, you want to gather all of your documents needed. So you're going to do your W-2s for each job, your 1099 forms for retirement, Social Security, unemployment, interest, dividends, or stocks, and miscellaneous income. Year-end amounts for MFIP, SSA, MSA, GA, vets benefits, workers' compensation, your student loan interest statement form, Form 1098E, tuition paid for you or your child for college or university, Form 1098T, verification of health insurance, Form 1095A, record of charitable donations. Records of child expenses, so any record of educational expenses for children in grades K through 12, childcare expenses, provider name, address, and tax ID or social security number, property tax refunds and deductions. So homeowners, you would do mortgage interest and real estate taxes paid past 2 years. Renters, a certificate of rent paid. Mobile homeowners, all the above documents. Identifying documents like your social security card, ITIN card or letter for all persons listed on tax return. Previous year's tax return. If you are self-employed or run a home daycare, there are specific tax organizers that need to be filled out before you are appointed. All right, so this is if you decide to pay someone for to do your taxes. A reputable preparer signs your return and provides their IRS issued identification number, which is required by law. Get a copy of your return and look it over. Make sure to ask questions about any entries you do not understand before signing your return. In the end, you're responsible for what's filed. And then red flags to look for. You never want to sign a blank tax return, so beware of anyone who promises they can get you a bigger refund than other preparers, and don't sign anything that's blank or not completed. Stay away from a preparer who bases the fee on a percentage of your refund. So to try to get your business, some tax preparers offer 0% loan advances that are paid off when the refund comes later. It may be tempting to get money faster, but it is not really free because you have to pay them for their services, and that they may charge higher fees and push add-ons you don't need. Essentially, you end up paying to access your own money. For example, if you pay $59 tax preparation fee for a $500 loan, that's like 142%. Sometimes you may not know if you qualify for a refund until after they have finished, and then you must pay them anyways. Bottom line, you're better off waiting for your refund for an extra week or so, especially if you can file for free. Helpful tax tips. Think about whether your tax preparer will be around to answer questions about your returns if you are audited. Keep in mind that an audit can happen years after filing. Get the refund faster and safer using direct deposit and e-file. Gathering the routing and account numbers for a checking account, savings account, or a prepaid card. You may be able to further reduce your taxable income through itemized deductions. Make sure to explore and review the list of deductions from the IRS to see if you qualify. If you get a tax refund, make a plan for it. Will it be used for savings, debt repayment, or getting caught up on certain bills? If you think you owe taxes, start setting aside money if possible. That will help you be more prepared. Also, you can arrange IRS repayment plans for your state's Department of Revenue if you own unstate taxes. That is something I did not know. And my husband, who's like a financial expert, also did not know that. So I guess things have changed with the IRS. So you can create an IRS repayment plan. We ran into an issue this year where I had done my taxes wrong and we owed like $3,700 or something like that. So having the option to call the IRS and make a repayment plan is extremely helpful for people that make a mistake like myself. Beware of scams. There are many scammers out there that prey on people, especially during tax season. The IRS will never call you and ask for your personal information. And I wrote just a note for myself to talk about the IRS scam that I had not too long ago. So I had an IRS, well, they were told me they were the IRS, but it was like like an American accent, and the person that was on the phone was telling me that my IRS was wrong, or that my taxes were wrong. I'd done my taxes wrong and I owed a bunch of money and I wasn't paying it and I was going to go to prison. And because I was so concerned that I had done something wrong, because I'd been doing my own taxes on TurboTax for a while, and I was like, maybe I did something wrong. So I actually did call them back because they said, if you don't call us back, you're going to go to prison or whatever. And I believed them. So I called them back. And the person that answered the phone kept getting my name wrong. And I kept correcting them. And they kept saying my name wrong over and over again. And so I was like, I don't know what's going on here, but I'm starting to feel like this is some sort of scam. So I hung up. And nothing ever came of it. Luckily, I'm glad that I ended up hanging up. But just be aware. If someone calls you and is claiming they're the IRS and asking for your personal information, they just don't do that. Here are some tax resources that are mostly free. Actually, I think all of these are free. Yeah. So H&R Block, you can pay someone to do your taxes. That part's not free, but they have a tax calculator on their site. TurboTax, you can do your taxes online. TurboTax does have some paid options, just to file a little bit safer, but you can do it for free on here as long as your filing isn't kind of complicated. I feel like when I was running my own business, I ended up paying extra because I wanted some help with my more complicated parts of my tax stuff. So you can pay them money, but they're mostly free. And then they have a tax calculator as well. The IRS, they're great, and they will happily answer any of your questions if you're kind of lost or stuck or just need help figuring out how to do your taxes correctly. You can just call them. And then the tax return calculator is on their website as well. And then there's NerdWallet, who also has an income tax calculator. So lots of places you can go to use a calculator for that. All right, thank you so much. I apologize for the little hiccups with the presentation and then also with not knowing the lizard brain article stuff. I will try to find that and send it out. If anybody wants that, just put your email in the chat. And then if anybody was not able to download the PDFs, put your email in the chat as well, and I will send those to you via email. So if anyone has any personal questions about their own personal finances, you are welcome to reach out to me and I can help you figure it out. But thank you so much for taking the time to be here. And if anyone has any comments or questions now, you can go ahead and say that, but I'm going to stop the recording for